One of the biggest questions that I get from GTA home buyers and home owners is, Rob, where are prices headed? And this is a loaded question. It is next to impossible to predict with certainty where home prices are headed. And people that do make these predictions often end up looking like fools, either calling corrections too early, calling recoveries too early, just being completely off. Luckily for you, I'm an extremely self-deprecating person, and I don't mind looking like a fool. So in today's video, I am going to try to answer the question, where are home prices in York Region headed over the next little bit of time? Now, this video is being inspired by a comment on my last video, so I really do appreciate those comments. If you have ideas for future content that you want to see in videos, leave them down in the comment section of this video. If you enjoy what I get into today, consider liking the video and subscribing so you don't miss anything going forward. On this channel, I'm all about breaking down the numbers, no fluff nonsense, trying to give you insights to help you with your home search or home selling journey. So let's get right into things. In this video today, we're not going to look at the entire market as a whole. We are going to look at detached homes in York Region because it is that detached market that really sets the ceiling for prices in any market that you're looking at. Then everything works off of those detached homes. So detached is up here. You have semis and towns kind of filling in right below there. Then you get into the condo segment, condo apartments and condo townhomes, which will kind of round out and set your price floor for these markets. You have to understand that in most times in York Region, I'm going to cover the entire region as a whole, but the closer you get to the city of Toronto, so when you get down into your Vaughans, Markhams, working north to Richmond Hill, Aurora, Newmarket, prices tend to get cheaper the further away from the city that you get. Georgina tends to be the most affordable market in York Region. It is also about a 45, 50-minute drive down the DVP, even more when you're in traffic. So understand that this is going to be a kind of broad look at York Region, and the further away you get from the city, kind of the cheaper prices will be. But as you get closer to, prices may be a little bit more expensive than what we're talking about right here. I always like to start by looking at transaction volume, and what I love about the Habistat, the charts we're using today, is that it gives you an idea of the actual transaction volume, which will be this blue line, and then the year-over-year change for each month. So you can see the trend right now was a big slowdown in transactions that really started back in July of 2021. Well, transactions really fall off a cliff. They didn't go negative year over year until July, and they stayed negative year over year until March of 2023. We saw a little bit of an uptick year over year for a few months before really just hovering around zero. So sales activity has still been trending down in the detached market segment right across York Region. A big reason for this is what I've talked about ad nauseum on this channel. It doesn't matter what region you go to, there is a gap between what sellers are expecting and what buyers are willing to pay for homes. And as this gap continues to exist, transactions really slow down because they can't come to an agreement on price. So I've always said, and I will stay true to this, I expect us to see an uptick in sales activity and transaction volume that will coincide with a continued drop in prices, and it'll give us a truer reading of what prices are going to be. But we haven't seen that uptick in transaction volume yet. And for the first 2 months of 2026, we are actually down 3.4% in January for detached sales. We were down 14.4% in February for detached sales right across York Region. Now, one thing that didn't really slow down until this year was new listings volume. This had a lot to do with terminations, people bringing listings back to market, so relisting properties multiple times. But you can see it was a good stretch of going back to the beginning of 2024, where really every single month we were seeing year-over-year increases in new listing volumes all the way up to December of 2025. But again, similar to that sales volume story, new listings in the detached segment in York Region have fallen off year-over-year for January, where they're down by 10.1%. And by 18.2% February of 2026. So a little hesitation from sellers to bring listings back to market early in 2026. And what that's resulted in is active inventory coming down year over year this February for the first time since back in June of 2023. That's the last time that we saw a year over year decrease in active inventory. So it's really been a steady run up in active listings to this peak that we saw last July, where we hit just over 3,300 active detached listings in York Region. When we lump those numbers in together, our active listings number and our sales, it gives us months of inventory, which is a great gauge of market temperature. Is it a buyer's market? Is it a seller's market? As of February 2026, the end of the month, It was up at 6.26 months of inventory. This is using a 3-month rolling average of sales. Again, that is down from the peak that we saw in May of last year, where it was 6.92, but it is up slightly from where we were last February. So the market continues to loosen up, even in spite of fewer listings coming to market. It's because those sales numbers are still lagging where we were a year ago. So the market continues to soften, and based on this metric, it points to further price correction to get the market back into balance. We also want to take a look at days on market. How long is it taking a listing to sell? It kind of gives you an indication of how much appetite there is for a product type. So in February, we saw it took 39 days on average for a detached property in York Region to sell. If we zoom back to last February, that number was all the way down at 27. So that is a 46.9% increase year over year, speaking to continued market slowdown. Again, we're in the early days. We may get a better idea come the spring market, but when you're comparing February to February of last year, up 46.9% last year. It was up 19.2% from February of 24 last year. And then when we go back to February of 24, it was actually, that was kind of where it about evened out. It was about the same as February 23, down 1.8%. So the market over the last 2 years has continued to show signs of taking a little bit longer for these properties to sell. And as a result, our sale price to list price ratio is at the lowest it has been for a February. It's down to 97%. So on average, homes are selling for 97% of asking price. That's down 2.9% from a year ago, and just speaks to the strategy maybe that sellers are employing right now, slash, again, the appetite that buyers have. People are looking at listing price and expecting to get a deal on list price. They're not looking at list price and expecting offer nights anymore, which is what was driving these big spikes we saw even back after the correction started. We know that the spring market of 2023 was pretty hot coming off the back of a big correction in 2022. So that number was up at 107.6. Even if we go back to February of that year, properties were still selling for 102% of the asking price. So that script has completely flipped. And like I said, we're actually down lower than we were at back in February of 2020 heading into the pandemic. Yeah, this 97% number is the lowest we've seen this decade. Now, finally, here we're going to take a look at median price, and this list chart is not going to really answer the question where prices are going, but it paints a pretty clear trend, in my opinion. Where things bottom out, I'm not sure, but here's that chart of median sale prices of detached properties in York Region. So we can see that back in the peak, which was February of 2022, the median detached home price was $1,808,000. Fast forward to February of 2026, that came all the way down to $1,375,000. That puts us right back in line really with where we were at back in February of 2021. But back in February of 2021, you can see that if we drew a line, it would be pretty significantly steep line up and to the right to the peak. So from the start of 2020 up to the peak, it was a very quick run up, very quick fall off, then a bit of a leveling out, whereas now it's a bit of a slower decrease downwards. But the question is, where do things really bottom out? And for that, I want to take a look at benchmark prices from Korea. The Korea benchmark price really mirrors median sale price pretty well. So this is the benchmark price for detached properties. And I've done the Toronto detached market as well as York Region to highlight a few different things. So first off, when you go to the peak of York Region, it's at $1,840,000. So pretty in line with where we're at with the median price at the peak in February of 2022. If we fast forward to 2026, that $1,377,000 for the benchmark price, again, is pretty close to the median that we saw from those Habistat charts. The first thing that I want to highlight is really this gap stayed pretty consistent between York Region and Toronto homes up until we saw kind of this frenzied buying in 2016. So there was a big market peak, especially I'd say in the GTA, the 905, as opposed to Toronto. Toronto did see a bit of a run up, not as much of a correction off the back of that run up in 2017. Whereas York Region saw the gap really close between Toronto prices and York detached prices before really widening out, bottoming out in 2019, and then really taking off again at higher velocity than we saw in the city of Toronto, closing that gap. And the gap has stayed relatively close, but I'd expect it to get back to, right now it's about $70,000, that gap. We saw it down here anywhere from $50,000 to $100,000 prior to the run up in prices in 2016. So if we're looking at the gap, I'd expect Toronto prices to fall further, but I would expect York prices to fall a little bit faster to kind of maintain that gap or reestablish that gap that we had seen prior to the 2016 run up in prices. The way that I want to try to determine where prices are going in the next little bit of time to try and answer this question is by using that benchmark price graph from Korea, drawing lines from 2005 through 2015, which was fairly linear growth that we saw. It wasn't anything crazy in that time period. Then extending that line outwards to determine where we would end up if linear growth had continued instead of these big spikes in that growth that we saw in 2016 and 2020 through 2022. So I've done this for Toronto detached and York region detached homes. The Toronto market really ends back up at around $1.35 million or so. And currently we're at about $1.45 million. So Toronto, we could see correcting maybe another $100,000 in that median sale price for detached homes. In total, do we overcorrect a bit? Maybe. Do we not correct anymore and just let the kind of trends catch up? That could happen as well. I don't think we're at a bottom yet. I do think we still have some price correction. Maybe the more likely scenario is that prices dip back below the trend line before catching back up in the future. So again, it's about, at this point in time, Toronto based on this is about $100,000 overvalued for that median sale price. If we do the same exercise for York region, that's the blue lines here. So the blue line is linear growth. This thick blue line cuts back through where we would be at. So we're actually back to about January 2017 prices is where we would expect the market to be at today, assuming we had linear growth that followed the trend from 05 to 2015. So that puts us right back at about $1.18 million. And we're currently at about $1.38 million. So that tells me, again, trying to reestablish that gap between the Toronto detached properties in York region, as well as just coming back to trend, that York maybe has another $200,000 or so to correct in terms of median prices overall to get back to where we'd expect to be at this point in history at this time of year. So I don't want you to hold me to an exact number, but I think I've shown that we do have some more room to correct, both based on that kind of linear price growth if we followed the pattern from 2005 to 2015. I'm going to touch more on this in a future video, how much further do we have to correct. But for today's video specifically, I think it highlights very well that there's definitely some room for York region home prices to come down. When you look at transaction volume, it's still lagging even the slowest year that we've seen probably in history, at least in the last 3 decades. We're seeing months of inventory well up in buyers market territory, which all speaks to more leverage for buyers, which speaks to a market where prices will continue to come down. How fast or slow this happens, all to do with the economy, affordability, unemployment, geopolitical events. So those are the things we're going to keep our eyes on going forward to try to determine how fast or slow this is going to happen. But bottom line, I think we're in for at least another year of price corrections. Let me know what you think in the comments below. Are we at a bottom yet? How long until we reach a bottom? When is that bottom going to happen? What will that bottom be? I want to know all of your thoughts in the comments below. Thanks so much for sticking with me right through to the end of this video. Till we speak again next time, please stay safe and cheers. If you enjoyed the insights in this video and you want to watch some more, check out this other one that I have on screen right now. And don't forget to like the video and subscribe to the channel.